Stock splits can appear to be a golden opportunity, but they come with hidden risks that could cost you dearly. Many investors overlook crucial stock split warning signs that can lead to costly mistakes. When a company announces a stock split, excitement surges. Prices seem more accessible, and everyone appears eager to invest. However, beneath this excitement lies a dangerous truth that could alter your financial future. Most investors focus on the immediate price drop, but that's just the beginning. The real danger lies in how stock splits can warp investor psychology. It's easy to get swept up in the hype. Imagine you invest in a popular tech company, feeling confident about your choice. Then they announce a split. Initially, it feels like a win, but what happens when the excitement fades? The price stagnates and your confidence turns to doubt. This is where the often overlooked impact begins. You're not just reacting to market fluctuations, you're on an emotional roller coaster that can lead to rash decisions. Have you felt that tension? It's real, yet many ignore the warning signs. After a split, many investors expect quick profits. But what if that expectation clouds your judgment? You risk holding onto shares too long or selling too soon, driven by emotions rather than a solid strategy. Why does this matter? It's not just about stocks, it's about your relationship with money. Allowing psychological biases to dictate your choices could set you on a path to financial disaster. So, how do you navigate this? Start by paying attention to your emotions when a split is announced. Are you feeling overly optimistic? Recognizing that is the first step toward making smarter decisions. Take a moment to pause before acting. Assess the bigger picture and think critically about your investments. You might uncover insights you've been missing. Remember, stock splits are more than mere numbers. They can distort your perception and jeopardize your long-term strategies. Reflect on your financial mindset. Are you letting fleeting excitement dictate your choices? It's time to take control. Stay alert, stay informed, and always invest with intention. Have you ever felt that rush of excitement when your favorite stock splits? Many investors celebrate this moment, but this thrill can sometimes mask a deeper psychological trap. Stock splits can stir up anxiety beneath the surface. It's not just about the numbers, but how they make you feel. When a stock splits, the price drops, making shares seem more affordable. But does that really change their actual value? This is where the often overlooked impact of stock splits on investor psychology comes into play. You might feel an urge to buy more, convinced you are getting a better deal. But are you just chasing a temporary high? Imagine you invested in a hot tech stock. It splits and suddenly it feels accessible to everyone. The excitement builds and you feel pressured to jump in. Did you do your research or did the thrill cloud your judgment? As time passes, that pressure intensifies. You see your peers celebrating their affordable shares, but soon anxiety creeps in as the stock fluctuates, leaving you questioning your decisions. This is the hidden stress signal many overlook. You might think it's just a split. What's the big deal? But this is where long-term money mindsets are either built or broken. The frenzy can lead to impulsive decisions, steering you away from your financial goals. As tension rises, consider this: what if your next investment is driven by fear instead of strategy? Each split could trigger a cycle of emotional decision-making that hinders your growth. It's like being on a roller coaster. It feels thrilling, but it can lead to a crash. So, what's the way forward? Start by recognizing your emotional responses to stock splits. Ask yourself, are you reacting to the split or responding with a strategic mindset? Take a moment to reflect on your journey and commit to clarity. Money isn't just about numbers, it's about the mindset behind those numbers. The next time you hear about a split, use this moment to reshape your relationship with investing. It's not just about riding the waves, it's about staying grounded in your own strategy. Recognizing these hidden signals can be your greatest tool for long-term success. If you found this insight valuable, consider subscribing for more perspectives on investing and psychology. Your money deserves a thoughtful approach. Did you know that a stock split can significantly alter your investment strategy? It's true. While many see splits as just a numbers game, there's a deeper layer that can reshape your financial perspective. Imagine waking up to find that your shares have doubled, yet you still feel uneasy. Why is that? The often overlooked impact of stock splits on investor psychology runs deeper than most realize. Let's consider this scenario. You've invested in a company you believe in and suddenly they announce a stock split. Your initial reaction might be great. More shares mean more value. But do you really understand what's happening in the minds of other investors? Many don't. They get swept up in the excitement, forgetting that a split doesn't change the company's fundamentals. This disconnect can lead to mistakes as investors become overly optimistic or irrationally fearful. Now, think about a friend who closely follows market trends and just bought shares in a company that split its stock. Meanwhile, you're feeling skeptical, aware of how emotional trading can backfire. Your friend's enthusiasm makes you question your own instincts. Now you're in a dilemma: should you jump in or stick to your gut? This highlights the psychological struggle that stock splits can create among investors. It's not just about the numbers, it's about the narratives we create for ourselves and each other. As tension rises, the stakes get higher. If you invest based on emotion, you might find yourself holding onto a sinking ship. However, understanding this psychology can be your secret weapon. What if you could learn to read between the lines and see beyond the surface excitement? Imagine a future where you navigate trends confidently instead of just reacting to them. That's the power of recognizing these hidden psychological effects. Ultimately, it's not about how many shares you own, it's about the mindset you cultivate around your investments.